This week we're talking jobs, GDP, and we're going to get into cattle prices. Welcome to the Weekly Livestock Market Update on Brownfield. I'm your host, Meghan Grebner. With us this week is ag economist Josh Maples with Mississippi State University Extension. Josh, good to see you.
Good to see you too, Megan. We're finally getting some rain. We've actually been a little dry after having decent rain for a while, but you know how it is. Two weeks without rain can do some pretty significant drying on you.
We're in that part of the world where drought happens pretty quickly. We're also in for some rain forecast, which I think means my kids will not be playing soccer this weekend. So maybe frustrating for farmers who are trying to plant, but okay for parents.
Yeah, that sounds right. It's as typical April and May here. It's been spotty. If you're in one spot, you've been in good shape, and some spots haven't been. So it's been interesting, as always.
Well, we're going to talk reports, and what a week again to talk about cattle prices. We'll get into all of that, but first let's recap what happened just overall this week in the markets.
Yeah, live steer prices. I know we're going to touch on this later. $221.94 per hundred. It's $221.94. I feel like I got to repeat that one. That's the 5 market average. This was up nearly $6 from a week ago. The June live cattle futures contract was up $3 from a week ago to $211.43 per hundred. The May feeder cattle futures contract price was up $4.36 per hundredweight on the week. It's at $294.88 to close the day. Choice box beef, $344.48 at the end of the week. This was up $11 from last week. And cash hogs were up $1.62 to $88.21 per hundred on the week. February lean hog futures up 15 cents to $92.95 per hundred. And then the pork cutout value was up $3.39 from a week ago to $99.42 per hundredweight this week.
And we're going to get into a lot of that coming up. As an economist and as somebody who loves data and numbers, how many times did you look at the 5 market average for cattle prices this week? And what's your initial just reaction?
Yeah, it's one of my initial reactions was a bit of a relief as an analyst, honestly, because we've been talking about it, Megan, that we think these prices have to go higher. We've been talking about this in the context of expansion. So selfishly, one of my reactions was a bit of relief that they are. There's kind of matching up with what we said needed to happen in order to spur these markets along. But yeah, the other one is just surprise, in terms of that's just a big number, really high prices.
As we take a look at slaughter numbers and looking on both the cattle and hog side of things, talk to me a little bit about how things are doing in terms of processing and what's going on in that element.
Sure. Cattle slaughter, 559,000 head this week. This was up slightly, about 4,000 head from a week ago, were the estimates, but down about 60,000 head from the same week last year. Hog slaughter, 2.49 million head. This was up 2%, or about 56,000 head from last week, and was up 83,000 head, or about 3% compared to a year ago. So similar to the trends we've been talking about in terms of cattle numbers, lower slaughter numbers, tighter supplies. On the hog side, we've seen some stronger numbers than we did a year ago.
Before we get into the cattle prices, I want to talk a little bit about in terms of availability, and when we think about beef in general, there's all of these conversations about trade and tariffs and what's happening there. What are you watching in terms of kind of the latest that's unfolding in terms of demand for U.S. beef and pork and what's happening in that tariff conversation, specifically as we think about China?
Yeah, I think, Obviously, this is really dynamic. This is much bigger than just beef and pork. I think that all that goes without saying. I was reading earlier today about China suggesting they might be open to some negotiations, but just kind of depends on if what we do in terms of tariff levels, and are we willing to budge? These are really, really high level conversations that have to be had, and beef and pork are a part of that. Now, all that pushed to the side, what it's leading to right now is we're not sending a lot of beef to China, and China has become one of our largest export destinations for beef. And so, at least in the short term, and until something hopefully is worked out, we're losing a significant amount of customers that we typically would send our beef to China. So really, that's concerning. That's really concerning for this industry. Really concerning about where those exports get redirected to. I will say that it's happening at a time when our supplies are really tight. Our beef production is expected to decline this year, so we're in a little bit of a different position than we would be, say, if this had happened in 2019, 2021, whenever we were, or especially 2018, 2019, when we had growing beef supplies. But still a big concern in terms of the products that we typically send to China.
All right. Let's get into these cattle prices. You mentioned earlier the 5-area live cattle price hit $221.94, which is a record high. We set, and to set the stage, we set a record a week ago as well. What are some things that you're pulling from these prices and some of the market activity that we've been seeing throughout cattle country?
Yeah, it's not just the live cattle prices. Obviously, it's we're seeing this across a lot of different price levels. And so, if you look at say prices of 5 weights in Oklahoma City, I pulled that for this week. 500 and 600 pound steers in Oklahoma City averaged $365 on the week. You don't have to look very far to see some $4 per pound, even at the 5 weight range. You certainly can see those in reports. 7 weights Meghan, 286 average in OKC, 700 to 800 pound steers in Oklahoma City. These are all record prices. These are all really, really strong prices. If you go back to the live cattle price, that 221, that beat the previous record, which was the day before, and that beat the previous record, which was 2 days before that. This last week we had 3 of the highest daily average 5-weight steer prices that we've ever had. We're in uncharted territory here, but I should say it's uncharted but not unexpected. We have tight supplies, and this herd has not yet showed strong signs of expansion. So there's support for cattle prices out there. And we talked about the box beef cutout earlier. There's still, so far, we're seeing pretty strong demand on the beef side as well. We can talk about, potential concerns about that later on in this show, but the fundamentals right now are really driving these prices, and the volatility. You got to add that in too. Is the fundamentals are the baseline here supporting it, but we are seeing some volatility, especially in futures contracts, given what's going on in broader macroeconomic.
When we think about the value that, and this is kind of bringing that trade conversation in as well, the value that adds to, one, the demand element, but two, also support to carcass weight and prices that are going back to producers. What do we think about in terms of risk management and making sure that we're covered in a time where we're facing volatility and some demand uncertainty that may not go away right away, because these trade deals don't happen overnight?
Yeah, these prices are just so strong. I mean, they're clearly above break-even levels for producers. I would think really, really strongly about doing some price risk management if you haven't already. And that includes folks who, have calves that hit the ground this spring and they plan to sell them in the fall. think about doing some sort of price risk management, whether it's some sort of contracting with who you typically sell to. If that's an option to you, using futures or options is always a tool. It's, you got to be larger to do that, but it's an option to you. Or check out something like LRP that you can do on a per head basis. All of these things, I would absolutely be, I'm not telling you got to do it, but I would absolutely be considering all the tools at my disposal right now, because you can lock in or protect yourself at some really strong prices in a really volatile time. And so it's one of those where it's, to me, Megan, I'm always a proponent of it, of considering it if it fits your risk preferences, but especially now.
Demand is a critical component to this as well, correct?
Yeah, for sure.
So when we think about price levels, not just that we're seeing in terms of marketing, but what we're seeing on the retail element, how does a report and an economy, and looking at the economy in terms of jobs or GDP, think about and relate back to one, price support and risk management, but also ability to maintain strong demand?
Yeah, and so that's a great question. Demand is a key part of this, and in the beef sector and the pork sector both, if you think about who our ultimate consumer is, it's the people that are purchasing beef and pork to eat, and they are subject to their own personal purchasing power. It's all of us. Whenever we decide what we're going to eat tonight, it's going to be based on what that cost, our access to it. Whenever we decide if we're going to go out to eat tonight or eat at home, and what we choose on a menu or at a grocery store, is ultimately depending on how confident we are, not only in the amount of money we have now, but in our expectation for purchasing power in the future. And so when you think about something like jobs report or GDP, the reason we want to watch these things is because they tell us things about the broader economic conditions. They tell us things about people's purchasing power, at least broadly. It doesn't tell me anything about your purchasing power in particular, Megan, or anybody else's purchasing power in particular. But at least broadly speaking, it gives you trends about which direction we're seeing these macroeconomic trends go. So if you think about that with respect to purchasing meat, it's generally speaking, when consumer sentiment goes down, or when GDP, at least over a period of time, goes down, and certainly if we enter into any kind of recession, think 2008, 2009, then people tighten up on spending. We also saw it early in the pandemic. A lot later, we saw a surge in spending later, but early in the pandemic, people got nervous. They got nervous about volatility in markets, and they tightened up. We all felt like we needed to tighten up a little bit because we were unsure about the future. That's the kind of stuff that you worry about on the demand front. Now, I'm not saying that we're necessarily we're certainly not in those types of environments right now, but those are the things you watch for at any given time. And why we pay attention to the things like jobs report and GDP reports.
When you look at this month's jobs report, the latest jobs report out today, GDP was out this week as well. Are there some things that you're watching specifically, and are there any concerns that you have thinking about the overall health of the economy?
Yeah, so the jobs report that came out today was actually more positive than expected. And so non-farm employment increased 177,000 jobs. I think pre-report was expectations of 135,000 job increase. So better than pre-report estimates, a tick lower than it was a month ago, but still pretty strong. Megan, one of the things underpinning this is our economy, our unemployment rate is at 4.2%, still a really, really low unemployment rate out there. So, that was really positive. Earlier in the week, we had the GDP report, and this is the one that, quite frankly, was difficult to interpret. And you probably saw a lot of different headlines pulling out various pieces of it, depending on, kind of what the goal of the article was. But or the headline was, but Commerce Department released their initial estimate of GDP growth during the first 3 months of 2025. And so, Meghan, GDP, gross domestic product, it's kind of this summation of goods and services that we produce here in the United States. And so the idea is that if GDP is going up, hey, we're producing more. It's a healthy indicator of how things are going. So in the first 3 months of 2025, the GDP actually declined by 0.3%. So this is the lowest rate we've seen since early 2022. It's lower than the pre-report expectation. Ahead of the report, they were expecting a 0.8% increase. And it's certainly lower than we had the last 3 months of 2025 when we were closer to a 2% increase or above. I can't remember the exact number right now. But what was interesting about this report and what makes it really hard to interpret is the biggest decline was because of imports. So if you think about GDP, it's what we produce, goods and services. Well, imports get subtracted from GDP. So all the imports that we bring in, you subtract that from this GDP calculation. We imported a lot of stuff in the first 3 months of 2025 as companies, consumers, whoever that are importing things. They saw this tariff discussion happening. They saw the planned tariffs that were going to go in place, and they tried to get as much in. They probably tried to stock up as much as they could ahead of those things becoming more expensive. And so imports up 41%. This was the biggest driver for that decline in GDP that came out in this report, is those huge surge of imports in the first quarter of 2025. So that's going to be something to track. I also look at consumer spending in this. Consumer spending was still healthy the first 3 months of 2025, but it was down a tick from where it has been hanging out.
I think everything is when you think about news and information, right? Everything, you have your favorite news sources. How important is it right now to make sure that we're getting balanced news that isn't telling us what we want to hear, but more so telling us what we need to know and to make informed decisions and think about things like risk management or think about profitability or growth long term?
Yeah, I mean, that's always important. And I guess one thing that I would kind of throw out there is, obviously I'm a markets guy. And so I like to pay attention to what the markets are doing, what the data is telling us. And I think the fact that we're seeing so much volatility in markets is telling. And it's telling you that there's a lot of uncertainty out there in a lot of different sectors because of this broader economy level uncertainty. And I would translate that into saying, look, there's a lot of unknowns right now. A lot of this territory that we're in is a bit uncharted. We don't know exactly how things are going to play out in terms of are trade deals going to happen? Which countries are they going to happen with? When are they going to happen? These are all things that can have an impact on where we see the broader economic trends going. And so, Meghan, I'm not as concerned about that for the supply side of the equation because of what we talked about earlier, especially for cattle. Cattle supplies kind of are what they are. They're tight. We've got very few calves that are going to hit the ground this year compared to previous years. But that does come into play when you start thinking about the demand side, and is another reason that I would consider risk management if you haven't already.
Out next week, ERS monthly trade data. What are some things maybe you're looking for the beef and pork or cattle and hog elements?
China, I want to see how much meat we sent to China in the report. Try to get a handle on what that's going to look like, because you see the reports coming out that very little is going there right now. But what should we reasonably expect? And does that mean that meat is getting diverted to other places? That's my big question right now, and so that's what I'm looking for the ERS trade report to shed some light on.
Josh, it's great to see you. Thank you so much for your time.
Thanks, Megan. I appreciate it.
So for Weekly Livestock Market Update delivered to your email box every Saturday morning, go to brownfieldagnews.com. And for market updates twice daily, make sure to check out the Market Minute with John Perkins. Have a great weekend. I'm Meghan Grebner for Brownfield.